a value investor, and I'm used to buying stocks and having them go down initially. That's value investors are like paratroopers. We go into unpopular areas and kind of fight our way out. So Amazon, one of my favorite stocks that I own a lot of, is down, what, 40% this year. Doesn't really bother me, because what Bezos said about the dot-com bust applies today. It applies all the time, which is, he said, I came in and I would look at our stock going down, and then I would look at our internal metrics and they were all going up. So he said, I was fine. And that's where I would advise your listeners to focus. Like, just because a stock's down a lot doesn't mean it's bad. It just means that people don't like it. Remember Ben Graham's famous maxim that in the short run, the market's a voting machine. It's a popularity contest. But in the long run, it's a weighing machine. It weighs value correctly. So that's your job, is to weigh the value. And a value investor has faith that ultimately that weighing, if I'm correct, will be reflected in the marketplace. So I would only cut my losses if if a stock was down a lot and I realized I'd made a mistake in the analysis. Like, let's say I own Netflix and I saw that their subscriber numbers were falling, or Facebook, and I saw that the subscribers were flat and the engagement was down. I would say, geez, am I really wrong that Facebook has a moat? Why the hell is he changing his name? Why the hell is he spending 10 billion a year on the metaverse? And I would have a serious conversation with myself. Am I wrong, or is the market wrong? And if I'm wrong, I'm selling. If the market's wrong, I'm buying more.